Hey guys, hello and welcome to Commodity Champions. I'm Manisha Gupta. It is that part of the year when the gems and jewelry sector gears up for the wedding and the festive season demand. We have seen the precious metal prices actually gain up into the international and the Indian markets. The gold prices are headed for a weekly and a monthly gain. It is trading at a 3-month highs and is up 6% from its August lows. What has propelled gold further is the subdued environment in the equity markets. Globally, we have seen rising politically and economic uncertainties, and that has led to more safe haven buying. Investors also are trying to diversify their portfolio in gold amidst Brexit uncertainties and doubts surrounding the Italian budget. But when it comes to the crude oil prices, the US crude is down by 10% for the month of October, and in the same time, the Brent prices are down by 9% as well. The US inventories are up for the 5th straight week, and we also have seen production increase from US, Russia and Saudi Arabia as well. However, the sanctions deadline on Iran on November 4th is keeping the markets on the edge. To discuss this further, we have with us Markee Keenan of Societe Generale. We also have Stephen Fisher, who's President World Diamond Council, and we also are joined by Ishu Dattani. Gentlemen, hi, thank you so much for joining us. Mark, coming to you first, what is your sense about the gold prices for the near term, slightly longer term as well? And do you see the boost in the demand due to festival cheer? And also, is it a good time to now start investing in case of gold?
Well, certainly this time of the year is widely and globally associated with the seasonal demand period in India, and we're seeing that playing out at the moment. And certainly the sell-off that we're seeing in equity markets around the world and the concerns in a variety of different areas seem to be translating into a reasonably solid amount of safe haven buying. And we can measure that also a little bit by the strength in the yen, the investing into US 10 years as well. So it does seem to be a bit of a widespread phenomena. The problem with gold is that until we break really above 1,300 and we stay above that level, many people are still very concerned and nervous about the headwinds faced from the rate hike policy out of the United States and the monetary policy, which weighs on gold and has caused much of the weakness this year. So until we get any relaxing in the rate hike policy out of the US, potentially, we don't predict that to be the case, but that may be something that would add to extra confidence for people going forward. But at the moment, from these levels, we do see upside, a little bit more upside this year, a bit more upside to 1,275 in Q1 of next year. So any weakness in the context of in the gold price, in the context of the weakness in wider financial assets, looks to be a good buying opportunity.
Mark, also, how would you look at the gold prices from a slightly longer term, let's say a 1 to 3 year perspective in sense of returns?
Over the next 1 year, we've got prices forecast for a Q1 average of 1,275, and we see that drifting very slightly lower over the rest of 2019, down to about 1,250, and that really is a function of the rising rate outlook. So we don't have any bullish forecasts on gold per se as yet, but we see it a little bit higher from where we are now.
While the gold and the industrial metals have done well, Mark, that perhaps is the reason that we have seen the silver prices gain along that as well. But going forward, how are you estimating the prices to range?
Well, silver is interesting because, of course, it takes its direction from many different areas, the dollar, gold and industrial metal prices, specifically the copper price. So the weakness in silver this year has largely been a function of the weakness in gold, and it's followed it down, and not helped indeed also by the weakness in copper that's been very vulnerable to the trade war dynamics and rhetoric that's been a dominant theme in the second half of this year, certainly. So for silver to move higher, we really need strength in gold, which we're starting to see, and we need strength in the copper market as well. We're expecting that to move higher. We're expecting about $350 more upside in the copper price from where we are now, up towards around $6,500. So if we get both copper and gold simultaneously coming together, we expect silver up to around $16.
Mark, I also want to come to you with the crude oil prices, and we have seen a very sharp correction for the month of October. What would you give this correction to, and what is your sense on where can we see the prices headed for rest of 2018 and much of 2019 as well?
It's very difficult to say. I mean, in large part, much of the uncertainty has been driven by the U.S. administration and Trump. As we move through the midterms, as we move through the beginning of sanctions on Iran, we'll enter a period where at least we don't have any major events on the horizon. And how the trade war then evolves from there, I think, is going to be instrumental in shaping how risky assets around the world play out the rest of the year. And as a function of that, crude oil will take some direction from it. The fundamentals of oil are still, in our view, very supportive. Economic growth is widespread, it's diversified, it's solid. There's a little bit of a slowdown next year, but the majority of global growth, the slowdown in global growth is coming from developed markets. Most of the oil supply growth is in the emerging economies like India and China, and they're still showing solid demand. So we're optimistic on the gold price, and on the crude price, and we see it up from current levels now to around 82, 83 in Q4. But we really need to sort of step through this mist of geopolitical risk, of macro risk, of this environment of risk off in many of the financial assets for gold fundamentals to come to the surface.
Mark, how are you looking at the industrial metal prices? Because for the month of October, it is quite mixed. But China's slowdown now seems like a reality, while, of course, the US GDP numbers have come in on the positive side. But there are concerns that have led to the international demand growth. What do you think are the better metals to start investing in right now?
Well, we're particularly bullish from these levels here on nickel, on copper and aluminium to a degree. Nickel probably the greatest upside. This is from a short-term horizon looking into Q4. We see about $1,700 of upside from current levels on nickel and about $350 of upside on copper. Aluminium a little bit less, around $100, $200. And, the influence of the trade war on metals is highly diversified. There are three main channels of influence. There's the direct sort of channel by slowing GDP growth, global growth down, which obviously impacts metals from that perspective. There's the increasing of the dollar as a function of the increase in safe haven demand for dollars, which weighs on metal prices. And then there's slightly more subtle effects, which are interesting, where as trade war rhetoric starts to increase, people start to wind down inventories. They don't want to be exposed to these, and that tends to sort of support prices. So how these dynamics play out is going to be critical in the short-term direction of metals going forward from here. But probably nickel is our top pick within the industrial metal sector from where we are now.
Well, quite a week and a month it has been for the commodity markets, and as Markee Keenan tells you that this is good time to stay in gold and silver. The crude oil prices will see a rebound, and as far as the metals are concerned, he clearly has laid out his bets in sense of nickel as a top performer. So that is where you could be allocating your monies from. So that's the view really coming in for the near term, and the longer term staying in case of commodities. With that, we'll go for a very short break, but when we come back, we'll tilt further in case of the precious metal prices. We'll tell you on what to expect in sense of diamonds, gold and jewelry after this very short break.